welcome to NDTV Profit. I'm Smriti Chaudhary and you're watching Ask Profit. And on this show for the next 30 minutes, we'll take all your stock related questions and get them answered from our fundamental and technical guests. Today we have Gaurang, Shah of Geojit Financial Services and Aamar Singh of Angel One joining us on the show today. But before we jump into the questions, let's take a quick look at the markets. If you look at the benchmark indices, they're up and about today, up about 1.5% in trade. On the other hand, broader markets are trailing the benchmarks today with Nifty Midcap 150 up about 0.8% or 0.9% thereabouts. Nifty Small Cap up over 1% as well. So a pretty good start to the week, and a very important week, in fact, with budget coming up. And we'll see how this plays out. But let's look at the sectors as well. All sectors up and about, all in green, in fact. Nifty IT has also turned green. It was mostly in the red, and Nifty Bank is up about 1.5%. Among the gainers and losers, if we look at, we have ONGC up 7.5% in trade. Good move by oil companies there, and followed by Adani Enterprise and RIL up over 3% in trade. But now, today, we're focusing on a mid-cap stock, which is Shakti Pumps, that came out with its results, and quite strong results there. If you look at the revenue, that's up about 57% to 495 crores. EBITDA up about 3.4x with 70 crores as compared to 21 crores. And margin up 735 basis points to 14% as compared to only 7%. Net profit up 45 crore, up 4x. Now, let's take a quick view from our guest. Gaurang, Shakti Pumps, very, very strong results, up in trade today. What do you think for the longer term? How constructive are you on this particular stock? And considering it's a smaller stock, give us a view on the sector as a whole as well.
Well, I thank you, morning, and thanks for having me on the show. So, first, let me speak about the expectation towards the agri sector and ancillary sectors which are associated with the agri sectors and the budget. Now, it has been a long-standing effort by the government in terms of improving the productivity with respect to how much does a farmer output in a year in terms of crops, yield, productivity, and what kind of technology does the farmer use. It is also a well-known fact that modernized agriculture technology has been a relentless effort by the government to provide to all our farmers, brothers and sisters. And in that process, not only companies which help irrigate, companies that make equipment help irrigate the farms, but also companies associated with fertilizers, urea, drip irrigation, etc., comes into play. This particular company, though there is no coverage on this, but let me say this, that it has got a very strong presence in terms of diversified products that they have in the category. And it caters to the lower end to the top end of the pyramid. And it has got a large market share. By default, as agri activities pick up, as productivity increase, as more and more technology gets associated with irrigation, etc., micro dripping, etc., companies associated with this sector will do definitely well. Can't give a specific comment, but it looks quite strong in terms of sector and in terms of performance.
Right. And as we're moving closer to the budget, we can also see some schemes by the government that may give a boost to the agriculture as well. But let's quickly jump into the questions. The first one is from Shrikant, and he's talking about Scient. He wants to know what's the good entry price for buying Scient, considering the quarter 3 numbers. Now, from what I understand, the quarter 3 numbers were quite weak and the stock is down in trade today. It's down about 3% right now. Aamar, let's start off with you. What's the buying price if somebody wants to get into the stock at this juncture? And would you even suggest getting into this one?
Yeah, a very good morning. Looking at Scient, what we are seeing in Scient is that the stock has been witnessing some sort of correction post the sharp rally. So the stock from almost 2400 levels is currently around 950, 960 odd levels. And this is a very crucial support zone for the stock. So ideally, if the stock does not breach the 1900 mark, so 1900, 1950, that's a good level to enter this stock. But one needs to remember that since the short-term technical indicators are clearly very negative, so what it effectively means is that there could be a pullback to the stock that is towards the 2100 level. So it's good from a trading perspective because 1900, 1950, that's a very strong zone for the stock, support zone for the stock. And also if I look at it from a long-term perspective, the momentum is definitely there and the uptrend remains intact. So yes, at current levels or slightly below the current levels, it can be a buying opportunity with a stop loss below 1900 and upside of 2100 levels.
Right. And for the longer term, Gaurang, Scient after the third quarter results, very tepid top line growth. Would you suggest getting into the stock?
Well, so let me give a very honest disclosure. We had been covering Scient and other related mid-cap IT stocks for a pretty long period of time. And it is also a known fact that mid-cap IT companies over the last many quarters have been outsmarting in terms of not only earnings, but also with respect to an investor's wealth with long-term investment into mid-cap strong IT companies and the appreciation thereafter. At the levels where the stock is trading, our targets have been achieved. And since the numbers have been announced, we have put the stock under review. So the earlier recommendation was to buy, targets are in place, post the numbers. And as you were mentioning, there was a little bit of disappointment, not only in Scient, but some other mid-cap IT names as well. So I can't give a specific buy, sell and hold because the stock is under review right now, given the performance that they've delivered.
Right. Gaurang, on that note, we have another viewer talking about KPIT Tech. This one's from Rajesh Maheshwari. He wants for this one, he's already bought into the stock at 1390 levels. Would you suggest holding on to this one?
So KPIT Tech is where we currently have a hold recommendation. Of course, the targets have been achieved over here as well, the levels that we saw. But in case if that's a long-term investment, I would advise to stay invested. And if you have investable amount, you get dips, you can possibly consider adding on to your investment as well.
Right. And for the shorter term, Amardev, would you suggest holding on to this one? Their buying price is 1390.
Yeah, at the current levels, I would definitely recommend holding on to the stock because today the stock did witness some sharp correction, but that's a very strong support zone. So 1300, 1320, that's a very strong support zone. Again, it has a similar structure as to Scient, which we were talking earlier about. So the levels to watch out for the stock is 1300, 1320. That's a key zone of support. If 1300 is taken out, then we could witness some sharp correction in the stock. On the upside, the stock has got resistance around the 1450, 1480 levels. So yes, you can definitely hold on to your position, but getting an opportunity, you should look at exiting as well.
Right. Let's look at the next one. This one's from Tejas, and they're talking about two stocks here. They're talking about UPL that they have bought at 623 levels and Gandhar Oil, that's quite a recent listing at 275. Gaurang, do you cover these? UPL, I'm sure you're covering, and Gandhar Oil. What would you suggest for the longer term in these two?
So UPL, we have a target somewhere close to about 630, 640. I would request them to continue to hold. Unfortunately, the problem with this particular company was the earnings, which was a major disaster. But the management commentary post the earnings, that was not only restricted to the third quarter, but if you reflect upon the second quarter also, as far as UPL is concerned, it was a little bit of disaster. But the improvement is definitely visible. Management has guided towards better operations, better operational efficiencies, and launching of new products. So if you have a long-term investment, hold on. If you got in at higher levels, use current levels of somewhere close to about 530 or 540 to add on to stocks so that your investment level comes down. On Gandhar, unfortunately, I don't recollect if we had a coverage on the IPO. I'll give it a pass.
All right. Since I'm sure there won't be a lot of data for a technical check, we'll skip this one for that. Let's quickly move on to the next one. This one's from Khushi. Then they're talking about Apollo Tyres. They've already bought the share at 445 levels. Their time horizon is they're not sure of the long term or the short term. So let's take a short term view on this. Apollo Tyres already bought at 445. Would you suggest holding on to this one, Amartya?
I would say Apollo Tyres continues to be very strong on the different time frames, be the monthly charts or the weekly charts. And also what we're seeing is that there is very strong momentum for the stock. What we're witnessing for the last few trading sessions is that the stock is in for consolidation. So on the downside, the stock has got support around the 490, 500 zone. So that is a level where if one wants to trail the stock, that should be a level below which one can trail the stock. And for any upside rally, the high that the stock had made on 20th of January, that is 545 level. So that's a level to watch out for. So 500 and 545, that's a level to watch out for. The trend, even from a short-term perspective, continues to remain strong and positive for the stock. So I believe one can hold, or one can do part profit with a trail below 500 for the rest.
And Gaurang, for the longer term for Apollo Tyres, and talk to us a little bit about the sector on the whole as well. We've already seen earnings of Scient coming out last week.
So we are extremely positive, to be very honest. And let me give you a brief, and your viewers a brief reason why we are positive. There are a whole host of launches which are going to be lined up this year, that is 2024, and possibly the first 3 to 6 months we'll see quite a few of them getting launched. That is not only restricted to the two-wheeler, three-wheeler, but also for the four-wheeler and high-end commercial vehicle as well as multi-tonnage vehicles. Second, the new order market looks extremely robust for the tire industry. Replacement market, which is, if the wear and tear of the tire on your vehicle is something that is going to put your life at risk, you definitely go and replace it. So that's going to be the replacement demand. The two more positives that have happened over a period of time is the rubber prices in the commodity markets have come down and have been quite stagnant or range bound. So that's a huge positive. Crude oil prices, which was at $90+, came down to close to 75, and now it is trading at somewhere close to about 80 plus, 84 plus levels. And that's a short to medium term blip because of the situation that is in the Red Sea and the aggression by Houthi rebels. So this will keep a little bit, sticky wicket from a short to medium term point of view. But given the opportunity that is there for the tire manufacturing companies, OEM segment companies, battery manufacturing companies, I think you should continue your hold as a recommendation for Apollo Tyres. And of course, we have others, JK Tyres also in our coverage.
Right. Next up, we have a question from Rama Raju, and they're talking about Tata Elxsi. They've bought at 8,800, which is higher than the current market price. Now, it's given about 17% returns in the last 1 year. Aamar, would you suggest holding on to this one?
Yeah. So if I look at Tata Elxsi, what we are seeing is that there definitely has been a loss in momentum on the monthly charts as well as the weekly charts. So that tells me that the stock is not in for any significant rally from a short-term perspective. Having said that, what we see is that towards 7,500 levels is a level where the stock would find support, and also on the intermediate term trend as well as the short-term trend, the stock has moved in oversold territory. Even on the long-term charts, the stock is moving close to a very key zone of support, that is the 7,500 level, from where we could witness a pullback in the stock. But the stock, even if it pulls back, one can expect some sort of selling pressure coming around the 8,000, 8,200 level. So it's going to be more of a range play with a downside support coming at around 7,500 level. So that's what needs to be watched out for.
All right. We'll slip into a short break now, but we already have a lot of queries pouring in, and we'll try to take as many as we can after the break. Stay tuned. Welcome back. You're watching Ask Profit. Without wasting any time, let's quickly jump into the questions. The first one's from Yash, and we're talking about Praj Industries. He's already bought at 502 levels. Currently, the stock is trading at 505, up about 0.5% in trade. They want to know if they should continue holding on to this one. Gaurang, would you have coverage on Praj Industries?
Well, let me just keep my comments to the company and the sector because we don't have coverage, so I won't be able to comment buy and all. But the opportunity is tremendous, to be very honest. And with the kind of focus that the government has got on clean and green fuel, this company is, basically involved into ethanol. And the technology that it offers is definitely augurs extremely well for the incumbents in this particular sector. Has been an outperformer over the last year and a half, if you actually go to see that in terms of price performance, in terms of earnings. And there is also a possibility that in budget, the Honorable Finance Minister can possibly touch upon renewable sector, clean and green energy, forms and the use that we'll have. It's a good company, well managed and has been doing well. Unfortunately, no coverage, so no specific coverage.
All right. Gaurang, we have a lot of questions on railway stocks. I'm taking Vineet from who's written to us from Goa, but there are multiple queries on railway stocks, specifically IRFC and RVNL. Do tell us about we've already seen quite a run-up in railway stocks, and there's also this expectation from the budget that may be the reason we'll see these stocks getting even more expensive from here on. But what would you say to people who've already bought into this stock, or now since it has run up, and that might be the reason why people would want to get into the stock?
Well, for the benefit of your viewers, I'll highlight 3-4 sectors and kindly allow me 30 seconds for that with respect to budget. So there are some themes that we believe at Geojit will do well over a period of time, not only in this budget, but over the next many budgets that we are going to see. Which are those themes and where we can expect the Honorable Finance Minister to do a decent or a sensible budgetary allocation? First one is defense. Second one is power transmission, power distribution, power equipment, and power generation. Third one is railways, because there is still an issue with regards to last mile connectivity. And the Honorable Union Minister, Mr. Nitin Gadkari, has already gone vocal to increase the transportation via railways, otherwise which is done by road. That also will lead to lower consumption of crude oil, because electrification of railways is going through in a big way, and that will reduce the dependency as well. The fourth sector that we believe will be seeing a decent budgetary allocation is infrastructure. So all these, 4 main sectors and 2 ancillary sectors, which is power transmission, distribution, and power equipment, we believe that there's going to be a tremendous amount of growth story. Now, this was the similar case last year. If you actually go to see, defense stocks had run up, some mutual funds offloaded, defense stocks corrected, but from that date to current date, defense stocks individually are up maybe 5, 10, 15 or 20%. So there is tremendous amount of potential, and this is not a 6 months, 1 year story. I think this is a multi-year story.
But don't you think the railway stocks are expensive at this juncture?
So the opportunity, see, that is what, Smriti, the problem is, what is the view with which you have invested? Now, I will not go into specific names, but let me say this, with railways, both government-owned as well as private companies are likely to do well, because you still have last mile connectivity problem. You have still got many more places where you need to lay down railway tracks and connect. You have modernization of railway tracks, you have modernization of railway stations, you have high-speed trains like Vande Bharat, you have possibly a higher speed train in form of Ahmedabad-Mumbai connectivity, that is bullet train that we're talking about. You have wagons and coaches getting replaced, so there is huge opportunity. So if short to medium term, they may correct because they have gone up. But long term, I think the growth story is still intact.
All right, fair point. We're also talking about Salasar. This one's also from Vineet. Now, they've already bought the share. They want to buy at the current levels, and it's up 10% in trade today. Aamar, would you suggest entering at this level?
Yeah, I would say the stock has significantly rallied, and if you look at this month itself, the stock is up almost 100%. So chasing such a stock is always risky, because there's as Gaurang was also pointing out, that the stocks are good, but at what price? Do you want to buy at this price, or you want to wait for correction? Sometimes the stocks don't really correct and they continue their upward trajectory. But at the current levels, I wouldn't recommend getting into the stock, though the stock is very strong from the long term as well as the intermediate term trend.
All right. Next up, we're talking about SBI Card. And this one's from Tanya from Ghaziabad. They've already bought shares at 900 levels. Should they exit the stock is the question, Gaurang. We've seen results. Brokerages seem to be very pessimistic on the stock.
Let me first give an honest disclosure over here again. We have been having a buy-side recommendation on SBI cards. And, post the announcement made by the RBI with respect to unsecured loans, not only companies like SBI Card, but also NBFCs, which had a decent amount of large exposure towards unsecured loans, did correct to a great extent. So we are seeing an intermediate consolidation or correction in SBI cards. But if you are a long-term investor, I think don't be disheartened by this correction. Our sense is that over a longer period of time, performance will be delivered in terms of earning visibility. If you got in at higher levels, you can possibly consider adding on to your investment at closer to 700 or below. And if one wants to make a fresh investment as well, then I think 700 levels or sub 700 levels would be a decent level to start accumulating the stock.
All right, fair point. Next up, we have a question from Chirala, and they're talking about Bank Nifty options. 31st Jan, the call price is 46,300. Aamar, he's asking, will it increase or decrease?
Yeah, I would say overall we've seen a significant move today in Bank Nifty as well. And also we see India VIX has also gone up significantly. It's up by almost 9%. So ahead of the budget, buying options would be a pricey affair. So you need to be very careful because the premiums could shrink. So you have to be careful there. As far as the levels to watch out for Bank Nifty, again on the upside, the key zone of resistance for Bank Nifty is somewhere around the 45,600, 45,700 zone. That's a zone of resistance. So in case you're long, that's a level where you can get an exit opportunity. But you need to remember, as I said, premiums are going to be extremely high ahead of the budget.
Right. Next up, we have a question on Tata Power, and this is for the shorter term. Would you suggest holding on to this one for the shorter term? Aamar?
Looking at Tata Power, this stock again is technically very strong across different time frames. So yes, one should definitely hold on to it because the stock did witness some consolidation over the last couple of months. But then the stock has reached the 350, 360 zone. Currently, it's around 382 levels. So you should definitely hold your position and fill it with a stop loss below 350 levels.
All right. Ankush, I hope you've got your answer. And the next one we're taking is... okay, there are a lot of questions pouring in. This is from Firoz Ahmed from Hyderabad, and they're talking about ITC. Now, the results are expected today. Gaurang, what's your expectation from ITC? And for the longer term, would you suggest holding on to this one?
To be very honest, this is one stock that we've been covering right from sub 200 levels. It was languishing at 180, 200. Then it came out of that hibernation zone, crossed over to 250, 300. And then eventually we saw, I think it crossed 500. And post the announcement of the total demerger business, which did not go well with the market, we've seen the stock consolidate again between 400, 425 and 450. Numbers are going to be out. I'm not going to try to make any, preemptive statements. It's better to see the numbers and then dissect it and talk about it. So overall, our sense is that FMCG sector is going to do well. ITC is one of those players which was consolidating and has moved out of his hibernation zone. You could see consolidation over here, maybe for a little more period of time. But future earnings, we believe, will definitely be delivered on fallback of two counts. One is because of erratic monsoon last year, we saw semi-urban and rural demand at a lower scale, which impacted the volume growth. And certain input cost also had its pressure as far as the profit margins were concerned. But we believe these are short to medium term. Long term, we remain optimistic on ITC. So if it's a long term investment, our advice would be to continue to hold.
All right. And that's all the time we have today on the show. Thank you so much, Gaurang and Aamar, for taking the time out and for answering so many questions for us. It was a pleasure having you on the show. And viewers, thanks for tuning in. But lots more coming up on NDTV Profit, so stay tuned.